attorney Laura Anthony, founding partner of Legal and Compliance, a full-service corporate securities and business transactions law firm. Today is the continuation in a LawCast series talking about the OTC Markets policy on stock promotion. Paid promotions are often associated with pump and dump activities, where a third party is attempting to pump the stock price to liquidate at inflated prices, following which the stock will inevitably go down. Improper and misleading promotional materials, which can often be in the forms of emails, newsletters, social media outlets, message boards, press releases, videos, telephone calls, or direct mail, generally share the following common characteristics. Failure to identify the sponsor of the promotion, or if the promotion is paid for by an anonymous third party. Information that focuses on a company's stock rather than its business. Speculative language, including but not limited to grandiose claims and numbers related to the company's business, industry, financial results, or business developments. The touting of performance or profit potential from trading in the company's stock with unsupported or exaggerated statements, including related to stock price. Making unreasonable claims related to the company's performance. Directly or indirectly promising specific future performance, providing little or no factual information about the company itself, urging immediate action to avoid missing out, and failing to provide disclosures related to risks of an investment. Although not included in OTC Markets' list of common characteristics, another red flag is when there is a comparison between the company being promoted and a well-known, successful, or respected company in the same general space. OTC Markets Group monitors for paid promotional activity and reviews for anonymous promotions, connections to bad actors, and impacts on trading. Beginning in the first quarter of 2018, stocks associated with such promotional activity will be identified with a risk flag next to its symbol on the OTC Markets website. OTC Markets Group may also request that a company that is subject to promotional activity issue a press release to identify promotional activity, confirm information in the promotion or identify misinformation, and or disclose recent securities transactions by affiliates. Furthermore, OTC Markets Group may request information from a company and or its transfer agent related to transactions and request additional disclosures from the company related to share issuances, financing agreements, and the identity of people or advisors associated with these transactions. The federal securities laws also govern stock promotion activity. Section 17B of the Securities Act of 1933 is an anti-fraud provision which requires that any communications which publish, give publicity to, or circulate any notice, circular, advertisement, newspaper, article, letter, investment service, or communication which describes a security must disclose any consideration received or to be received either in the past, present, or future, whether directly or indirectly, by the issuer of such communications. Generally, the disclosure must include the amount of consideration received or to be received, from who it is received, such as the company, a third-party shareholder, an underwriter, or individual persons behind any corporate entity involved. You actually have to disclose the individual persons behind any corporate entity involved. The nature of the consideration, for example, cash or stock, and if it's stock, whether it's restricted or unrestricted. And if consideration is paid by a third party other than the company whose securities are being promoted, the relationship between the company and the third party. Moreover, I recommend that companies ensure such communications include a disclosure as to whether the issuer of the communications owns stock which may be sold in any upmarket created by the communication. The disclosure required by Section 17B must be included in each and every published document, including emails, message board posts, and other communications. I'm securities attorney Laura Anthony, founding partner of Legal and Compliance and producer of Lawcast. Should you have any questions about today's topic, please visit securitieslawblog.com and lawcast.com or contact me directly. Inquiries of a technical nature are always encouraged.